Altseason. Every altcoin holder is waiting for it, asking the same thing. How high can my coin go? 10 times? 50? Here's what almost nobody checks. That number isn't set by the coin, it's set by one line on a list. Grow the whole market 4 times, and one coin on that list can do 46. Today, we take the tool we built in the last 2 parts and point it at the last asset on the list. Altcoins. The question is this: how high can my altcoin go? Add the word Altseason, and you've got the 2 things altcoin holders are searching for more than anything else right now. But look at the timing first, because the market is not in a good place. Total crypto market cap sits at about $2.2 trillion. That's down almost 40% from a year ago. The all-time high, last October, was $4.27 trillion, so the whole market has been cut roughly in half. Bitcoin itself went from $126,000 at the peak to around $62,000 today. And there's a number that's even more frustrating if you hold altcoins. Bitcoin dominance, the share of the entire crypto market that Bitcoin alone takes up, is still sitting at 56%. The Altcoin Season Index, the standard read on whether alt season has actually arrived, is at 49. It needs to clear 75. So altcoin holders have been parked below that line for 2 years now, and this is exactly where I want to pull out a calculator. What follows isn't a prediction, it's arithmetic. How you put a target market cap on an altcoin and why that method keeps spitting out absurd-looking numbers like 50 times. Let's define the problem precisely. In part 1, Bitcoin got measured against gold. What percentage of gold's market cap can it take? That was the ruler. In part 2, Ethereum got measured against Bitcoin. What percentage of Bitcoin is it worth? So what do you measure an altcoin against? There's nothing. No cash flow, no 1,000-year-old anchor like gold, no reserve asset status like Bitcoin. You can read a white paper 10 times, and it will never hand you a price. So the question has to change. Normally we ask, is the tech good? Is the team good? Is it promising? The problem is that none of those questions produce a number. They never tell you what good is worth. Here's the question I use instead. What rank will this coin be? Market cap rank. It sounds crude, but rank is the only measurable ruler an altcoin has left, and rank comes with a price tag attached. What percentage of the whole market does a given rank get? That percentage has a name: dominance. So today, we're not betting on technology, we're betting on rank. That distinction is the whole video in one line. So how do you find out what a rank is worth? You look at the past. CoinMarketCap keeps historical snapshots of the market cap rankings on any given date. So I pulled 3 bull market peaks: January 2018, November 2021, and December 2024. And here's what comes out. When you overlay the rank versus dominance table from all 3 dates, the shape is almost identical. A cliff at the front, then a rapid flattening toward the back. Let's put numbers on that. Rank 1, Bitcoin, takes 32%, then 41, then 54. Rank 2 lands somewhere between 13 and 19%, but drop down to the 15th spot and you get 0.75%, then a half, then 0.4. Rank 50 is right around 0.1% all 3 times. By rank 100, you're under 0.05. A distribution shaped like that is called a power law. The top few take nearly everything and the tail gets crushed into dust. You can also see the market maturing. The front end gets fatter each cycle while the tail gets thinner. So this staircase is our ruler. Where you stand on it decides what share of the market you get. But let me be clear about one thing before we use it. This isn't a law of physics. It's an estimate pulled from 3 snapshots, and the shape can come out different at the next peak. Alright, we have a staircase. Now we need to know what the staircase is worth, and that takes 3 gates. Let's open them one at a time. Gate 1 is the size of the whole pie. How big does the crypto market itself get? We already built that ingredient in part 2. The middle scenario for Bitcoin's target was about $217,000 per coin. Multiply that by the roughly 20 million coins that have been mined, and Bitcoin's total market cap comes to about $4.35 trillion. So, what's the whole market worth then? Here, we work backwards. Divide Bitcoin's market cap by Bitcoin's dominance, and you get the total. If Bitcoin is half the market, the total is twice Bitcoin's cap. Simple as that. The dominance figure I'll use is 51.1%. Where that number comes from is the next scene. But plug it in now, and 4.35 trillion divided by 51% gives you about $8.5 trillion. That's the estimated size of the crypto market at this cycle's peak. Now, feel how big that is. Today's market is 2.2 trillion, so we're talking roughly 3.8 times from here. And since the record high was 4.27 trillion, it means the market has to reach double its all-time high. I'll be honest with you, that is not a small assumption. Keep in mind that Gate 1 is already a heavy door. Gate 2, Bitcoin dominance has to come down. But by how much? Look at what Bitcoin's share was at past peaks and the trend is obvious. 33.5% at the 2018 top, 41.4% at the 2021 top. And here's where most people get it backwards. They assume dominance keeps falling cycle after cycle. It's been doing the opposite. It's been rising because as the market matures, money concentrates harder into the number one asset. So I applied that same trend one more time. Going from 33.5 to 41.4 was a step of about 1.23 times. Apply 1.23 to 41.4 and you land on 51.1%. That's the dominance figure we just used. There's something important hidden in that. This assumption is not generous to altcoins. It actually assumes a market where Bitcoin takes a bigger cut than it used to. The altcoin share shrinks from about 59% at the 2021 peak down to 49%. So if anything, we're on the conservative side. And in practical terms, this gate is closer than it looks. Dominance is 56.4% right now, so it only needs to give up about 5 points. The condition analysts usually name for a real altcoin rotation is dominance breaking below 50 to 55% and holding there. That moment is exactly the Altcoin Season Index we saw going from 49 to 75. So gates 1 and 2 together say this: the pie grows 3.8 times and the altcoin slice widens from 43.6% to 48.9%. That part is the market's job. Now let's get to your job. Gate 3. Gate 3. Your coin has to climb the ladder. Of the 3 snapshots we overlaid, I'm going to use the 2021 peak as the base. When you convert the Ethereum target from part 2 into a dominance figure, it comes out near 19%, which is almost exactly where Ethereum sat at that peak. Anchoring everything to one consistent date keeps the math honest. So here's the ladder. Rank 3 gets 3.5% of the market. Rank 4, 3%. Rank 5, 2.5%. Ranks 6 through 10, about 2% each. And ranks 11 through 15, 1%. 16 to 20 gets 0.5%, 21 to 25, 0.4, 35 to 40, 0.2, 40 to 50, 0.15. Past 50, you're under 0.1%, and by rank 100, it's 0.05. The first time you see that list, it looks like a boring table, but the real discovery of this whole exercise is buried in it. That staircase isn't a gentle slope, it's a cliff. Here's what I mean. Say a coin around 40th place climbs to 11th. In rank terms, that's 29 spots. In dominance terms, it's 0.15% going to a full percent, more than 5 times. Now flip it. Slide 5 spots from 40th to 45th, and dominance barely moves because you're still inside the same band, which is why altcoins have no slightly right. Change class, and a multiple appears. Fail to change class, and you're pinned to the market average. That's the structural answer to why altcoin returns are so violent. Now let's actually run one through. The coin I'll use is Ondo Finance, ticker Ondo. And to be clear up front, this is a worked example, not a recommendation. Drop whatever coin you hold into this same slot. Start with where it is. The price is about 38 cents. Market cap is around $1.84 billion. Rank depends on which aggregator you ask, but it's somewhere between 35th and 40th. Divide that cap by the total market, and its dominance is 0.08%. So what rank could it reach? This is the spot where the calculation stops and judgment begins. The reason I picked this coin as the example is that the case for climbing is something you can check in numbers. Tokenizing real-world assets, the RWA sector, now runs $22 billion in assets under management, $10 billion of that in tokenized treasuries alone. This protocol holds more than 70% of the tokenized equities market with nearly $4 billion in total value locked. And the names it works with are BlackRock, JP Morgan, Goldman Sachs, MasterCard, and PayPal. So my assumption is that if the RWA narrative catches a real bid, this coin can compete for the 11th through 15th band. On our ladder, that band is 1% of the market. 1% of $8.5 trillion is $85 billion. Getting from 1.84 billion to 85 billion takes about 46 times. And here's something worth noticing. Just 3 weeks ago, this coin was 43rd with a market cap of 1.5 billion. Run the same target then, and the answer was 57 times. The coin moved up a bit, so the multiple fell to 46. That tells you what kind of instrument this is. When your starting point rises, the multiple left over shrinks, even though the target never changed. But here's the part almost everyone misses. This is the pressure point of the whole calculation. Suppose gates 1 and 2 both open. The market reaches 8.5 trillion, and Bitcoin dominance falls to 51%. How much bigger do altcoins as a whole get? Altcoins together are worth about $970 billion today. In the peak scenario, their share is 49% of 8.5 trillion, which is 4.16 trillion. Work it out, and that's 4.3 times. 4.3 times against 46. Same scenario, same market, and a tenfold difference between them. Where did that come from? Break it apart, and it goes like this. Market growth contributes 3.8 times. The rotation of money out of Bitcoin and into altcoins contributes 1.12 times, and climbing the rank ladder contributes 10.8 times. Multiply those three, and you get 46. So the core of it is this. Of that 46, the market hands you 4.3. Everything above it, the other 10.8, comes from rank. People say that when Altseason arrives, everything goes up. What Altseason actually contributes here is 1.1 times. The rest depends on one thing, whether your coin changes class, which means betting on rank, not technology, stops being a slogan. It's what the arithmetic says. I'm making the bull case here, but I'm not going to leave a big number on screen and walk away. 3 things have to be deducted from this calculation. 1. The unlock. 46 times is a market cap multiple. It is not your account's return. Right now, of a 10 billion total supply, only 49% of these tokens are actually circulating. And on January 18th, 2027, nearly 2 billion more get released at once. Measured against total supply, that's 17%, but measured against the tokens actually trading today, it's close to a 40% increase. Same event, and how it feels depends entirely on which denominator you count with. Let's run it. Divide the $85 billion target by today's float, and you get about $17.50 per token. Divide it by the float after the unlock, and you get $12.50. As a multiple, 46 times becomes 32. Market cap multiples and price multiples are 2 different numbers. 2, today's tail is thinner than 2021's. On the latter, ranks 35 to 40 were worth 0.2%. This coin's actual dominance today is 0.08, less than half the ladder value. And that means something specific. It isn't enough for your coin to climb. The ladder itself has to thicken back up, which was gate 2. Right now, money is packed into the number 1 asset and the tail is starved. 3, survivorship. Reach ranks 11 through 15 and you get 1% is measured on the coins that survived in those slots. Look at the 5 that held that band at the 2021 peak: Shiba Inu, Luna, Avalanche, Uniswap, and Chainlink. Luna went to 0 the following year, in a matter of days. So 46 times is the jackpot figure, and a lottery has a denominator. Today's calculator prices the jackpot. It does not price the odds. And again, none of this is a case for buying a particular coin. It's a case for filling in those odds yourself. So, last question. 46 times, 50 times. Is that a serious number? Honestly, I think 50 times is unrealistic. But if you ask me whether it's impossible, my answer is no. And to explain why, let me leave crypto for a second and talk about a stock. There's a company called SanDisk. They make memory chips, and they're a listed member of the S&P 500. Over the last 52 weeks, this stock's low was $40.10. Its high over that same stretch was $2,354. That works out to almost 59 times. It's the single best performing stock in the index this year, up 767%. That's not an altcoin. That's a large cap listed on a regulated exchange doing 59 times in a year. So no, I won't tell you 50 times on an altcoin is impossible, but let me show you a bit more of that same chart. The stock is now 48% below its high at about $1,200. Measured from the low, it's still up 30 times, but anyone who bought the top is down by half. 59 times is real, and giving half of it back is just as real. 2 facts from one ticker. With an altcoin, expect that swing to be wider, not narrower. Let me pull it together. What we did today isn't forecasting, it's mapping. 3 gates. The market grows 3.8 times, dominance falls to 51%, and your coin changes class. Open all 3, and you get 46 times. Account for the unlock, and it's 32. Block any one of them, and the number collapses to a fraction of that. And that closes the trilogy. Part 1 asked what percentage of gold Bitcoin could become. Part 2 asked what percentage of Bitcoin Ethereum could become. Today, Part 3 asked what percentage of the entire market an altcoin could become. All 3 turned out to be the same single line. Anchor times share divided by supply. In altcoins, that share just happens to be called rank. So the next time somebody tells you a coin is going up 50 times, don't go read the white paper. Ask them this instead. So what rank is it going to be? The moment they have to fill in that one line honestly, 50 times stops being hype or prophecy and turns into 3 assumptions you can actually check. One last thing, clearly. What you just watched is educational, built to explain a method, and the coin in it was a number to plug into that method. It is not a recommendation, and it is not investment advice. The call is yours. That was the arithmetic behind a 50 times altcoin.